Hello and welcome to the stock specific class here for Thursday, September the 29th. As always, if you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com and I'll be happy to answer those for you. Market's back to kind of its whipsawing state, so to speak. It looked like we were going to get that oversold rally yesterday. We talked a lot about this on Tuesday, so I don't want to, rehash everything I talked about on Tuesday. If you missed that, you can go to the YouTube channel and review that recording. But the market just completely wiped out that rally today. Now, this is what you expect in bearish conditions. One of the things I've talked about before is that when volatility picks up, when you start to get these big swings back and forth, it's bearish. It's reminding you that you're not in a bullish market condition. But as I talked about on Tuesday, the market is so oversold that it is at risk of having that sharp snapback rally that could last a few days and really move up quickly. So it creates a lot of uncertainty here. We're at a critical point, which I'll show you on the charts, but that actually just in the last 5-10 minutes or so, it looks like we're breaking below that critical level. So we could be on our way to get kind of that panic sell-off that we've been talking about for a while now, several months now. We've been waiting for a panic sell-off. I'll review some of that with you to kind of know what you're looking for. And unfortunately, this is a stock-specific class, but there's not a lot to really, I wouldn't really recommend getting into a lot of stuff in this condition, especially if it looks like things could turn really ugly. But I will talk about some ways you can kind of trade some of this volatility or do something during this volatility, whether you want to be more active in what you're doing or more passive. I'll go over a few ideas there when we get to that part of class. Direction alerts, again, not much has changed here. We're in that kind of oversold condition, although not quite at extreme levels. Momentum picked up a little bit from yesterday with that rally, moved off of the extreme into the sell area. Again, this tells us two things. It tells us that we are oversold enough to where we could snap back and rally here. But it also tells us that we could get all the way to the far left side, and if we do get that panic sell-off, all these are going to kick right over to the far left side, and things are going to get crazy. You're going to be looking at the TV saying, "What is going on?" or you'll be in shock, and that's usually when you know that you're in a panic sell-off, as everyone is in shock. You get those people on CNBC that get on and they start interviewing them, and they look scared. They look fearful. They're trying to hide it, or they're trying to be optimistic, that you can just tell in their faces that they're stressed. And so we haven't seen that with all these other sell-offs. We've seen people concerned. We've seen people have some fear, but we haven't seen panic yet. And I'm hoping that we get a good panic sell-off, so that if you haven't experienced one before, you have one that you can reference in. And so later on, when you get into another panic sell-off a few years from now, hopefully it's a few more years from now, that you'll be able to draw on this experience, and you'll be able to, when people say, "Oh, today was a panic sell-off day," you'll be like, "No, today wasn't a panic sell-off day. I've been through a panic sell-off day. I know what that feels like." And you'll have that reference point that you can use for experience moving forward. The breadth indicator is in the extreme range, and we have seen a lot of negative breadth in the markets lately. It still could push to the far left side, and will move to the left. Remember, the market is down today, so these update overnight, so these will move more towards the left side there as that updates. But it's just a matter of how I'm really interested to see how we move into the close. Now, a couple of things to point out now that it's on my mind here to remind you. What we could get today is just the break, we only have so much time left before the market closes. We could, and I haven't looked at the charts here for the last 10 minutes while I've been talking, so we'll look and see, are we kind of surging down here? But I could see where the market breaks the support level today. Everyone, market closes, everyone, all these fund managers are, determining their strategy is probably going to be to sell on Friday. If the market does start really selling on Friday, and we have a really ugly Friday, and it could be that way too, because remember, Friday is the end of the quarter. It's not only the end of the month, but it's the end of the quarter. And these fund managers have to do a lot of this shuffling and buying and selling related to that. And in this case, it could be a lot of selling that they're doing into the quarter, end of the month, end of the quarter. But keep in mind that markets typically, you've seen this happen time and time again, so hopefully it's a probability. Markets don't typically bottom on a Friday. So if you have a really ugly Friday sell-off, we're likely to at least open lower on Monday. We're likely to go lower on Monday, whether it's a gap down on Monday and then it reverses, or it really gets bad on Monday. That could be something to keep an eye on. Now, could it be, since we're just kind of moving a little bit below these support levels, we'll look at the support levels here in just a second, that it sets up for, because we're still oversold and really extremely oversold, can we get a snapback rally still that throws everyone off? Yeah, I mean, that's the thing that was the dilemma I had on Tuesday. Was I could see the market's getting ready for a big move. It's still in that condition where it's getting ready for a huge move. It's just hard to tell whether that's going to be a massive sell-off or a massive short covering rally that eventually rolls over. It's hard to tell. Now, again, the safe thing to do is to stay out. Then, if you don't want to deal with that type of craziness, you don't really want to be guessing. And so you'll notice that a lot of what I'm doing, and you've been seeing it in the portfolio, was a lot of just hedging. You're trying to grind out a little bit of profits. You're not looking to make a killing here, but just trying to survive and not only survive, but in this case, I'm trying to make some money too. If I was just looking to survive, I'd just get out and go to cash. But the good news is we're getting close to those bottoming type behaviors that the markets will get into. And so those of you who have been waiting patiently, you got all this cash getting ready to deploy, we're getting closer to that moment where we'll start to start building long-term positions that we'll look to hold for several months, maybe even several years. All right, so the sentiment is still high. It did move into that off that extreme range briefly, but it's moved back into the extreme complacency range. And again, this won't move significantly until that VIX really spikes up, which it's not going to take much for it to move into these boxes over here. It seems to have hovered in this area forever, but it won't take very much for it to move sharply to the left whenever that panic starts to kick in, whenever it starts to happen. But this has been showing you again that for months that these sell-offs have not generated any significant fear in that process, in that selling process. And so that's what the indicators are there for, is to help you kind of cut through opinions. These are based off of algorithms, and they're usually a little bit more accurate. All right. Anybody having any audio issues? Someone was mentioning something that the audio is not great. Like I've said before, if it's everyone's having issues with the audio, it's sounding bad, then it's something it might be able to be. It might be something I can. Well, I don't know if I can fix it, but if it's just one person, it could just be on their end, and I can't stop class to fix that because I don't know what it would be. But let me know if you're having any audio issues. Really, the only thing I could do is try to dial back in and see if that fixes it. But let me know if some of you are having the same some audio issues where you're having trouble hearing me. Okay, there's a couple people that are saying that the audio is clicking. Okay, I'm going to dial back in. So it'll just be quiet here for a second. I'll dial back in and then see if that fixes it. If it doesn't fix it, I can't do much about it, but I'll see if that helps. Give me a second here. All right, can everyone hear me all right? Is the audio any better now? Someone can let me know real quick. Like I said, there's not going to be anything I can really do about it. I guess I should just speak to you. Really right now, can you just hear me? Because I can't, I really can't stop class trying to fix it. And hopefully it wouldn't be in the recording. Usually if it's going to be in the recording, I would hear it on my end. So, okay, it looks like it's improved a little bit. Okay, let's go ahead and keep going then. All right, let's look at the direction or look at the buy sell ratios. Again, these are still really extreme. We talked about this on Tuesday. They did move a little bit in with yesterday's movement. They're going to move right back out with today's sell-off when that updates after the market closes. This sentiment indicator still not at the green line right there, which would be the extreme oversold. So there is room for this to move down, and it would likely move down. Well, it's going to move down with today's selling, but we'll see if we get that panic move. Again, I pointed out on Tuesday the indexes here, how extremely oversold they are. You don't see these buy-sell ratios this low. Look at the mid-cap, S&P mid-cap 400. You've got one stock with a buy signal and 260 with sell signals. This is really extreme. And again, this is what scares me a little bit about the condition we're in, because like I said, we could snap back very sharply right here when you're this oversold, and typically, that's what you'd be expecting. But knowing that we're breaking these June lows, and that's likely to create some panic selling, it's what creates that dilemma. All right, let's get to the charts here. And the key area that we're really focusing on, you can see we're breaking below it right here. Here, it's this 361 area, 360, 361, right in that area there. We haven't closed below that June low, and that's what people are holding out hope for, is that this will be a double bottom and then we'll rally up off of that. It looked like here on Wednesday that we got that sharp snapback rally. I felt like it would last at least another day. I thought it'd come in and fill this gap right here at the very least, or that it might be a 3 or 4 day move like we saw back here. But the fact that it reversed it right away, it puts that in jeopardy. However, there is another possibility here, and this is really going to depend on how we close. If we close at the lows of the day, we close below the June lows. Basically, if we close below 360 today, then I think all hell is going to break loose. Okay, I just think that's where it's going to start. It's going to start selling. Now, again, I'm not trying to be Nostradamus. I can't tell you that for sure. Nothing that I can analyze can tell you something for sure. It's just that would be very, very bearish if that were to take place. And so you would assume that would be leading to more selling. If we come off the lows here and we manage to close higher than that June low right here, here we came off the lows a little bit at the end of the day. So if we did something like that and came back up, what you have to worry about is that maybe this was just way this move down today was wave B, and that you could still get a little bit of a snapback for a couple days for a wave C, and you could fill in that gap, and then maybe it rolls over and makes another move down. And this could be a 1 or 2 or 3 day move. It could come all the way up into these levels here before dropping. So there would still be a little bit of that uncertainty of a snapback rally that you'd have to be aware of. Now, like I said, I'll talk about some ways you could kind of deal with some of this. When we get into, because there's not going to be a lot of stocks to go over today. So when we get to the end of class, I'll give you some strategies you can kind of consider for that. Okay. All right, let's look at. So again, that's real simple, and really, there's not much more to talk about here. We already know we're oversold. We're in this extreme reversal risk area right here. We're likely to push more towards the right side when this updates overnight, but it could still get more extreme. There's a lot. I mean, if I keep talking, all I'm going to do is keep repeating what I talked about on Tuesday. So let's move through the list here. It really is going to depend on where that closes here at the end of the day, and how that closes, and that's why I kind of outlined those two different possibilities right there. The Dow is already broken below the June low, so I think that's significant to point that out. It broke below it. Yesterday's move rallied back to it, and then now we're heading lower again here. So I think that's important to point out, especially when we look at the chip stocks, which we'll look at here in a second. They're already breaking below these lows, and so they tend to be leadership groups. Not that the Dow is a leadership group; it isn't. Usually viewed as being a leadership stock or index, but the fact that it's already broken below that, the more these indexes start breaking below it, and now the Nasdaq is broken below it. Again, the key is, does it close below it? That's going to be a real key to watch. But it's right at the lows of the day. It broke out of this little range it was in. Just really ugly day. Obviously, Apple is falling apart. One of the things I talked about a few weeks ago was Apple is going to be the stock to look at. If it starts to break down, then that means that because that's been the safety play. Everyone's gone to Apple. Okay, all right. Everything else is falling apart. Everything else is going to hell. Apple is the stock that just keeps resisting going down on the down days and rallies strongly on the up days. So it's become that crowded trade. Everyone is in it or started to get into it, and now they're starting to panic sell out of it a little bit. We're seeing, you can, in fact, let's pull that up real quick just to, you can see the real ugly move. And really what really fueled this today was it had a bullish reversal day yesterday. It gapped down on that bad news, traded all the way down here, then came all the way back up here. Didn't close at the highs of the day, which is usually what you'd like to see, but it closed higher than where it opened, reversed that downward move. Looked like and again, remember yesterday's mindset was this could be that snapback rally, and that could last a couple of days. And so when Apple put in that bullish reversal candle, I thought, man, this thing could is going to rally with the market if the market rallies another day or two. And then it just gapped down today and then broke those lows and got really ugly. Now it's trading at the lows of the day. It's starting to fall apart a little bit, and you want to see a stock that's going to really get hammered in a panic sell-off. It's going to be Apple, because people are going to be like, not only are they going to see the Dow down 1,000 points, and that's going to freak them out. Although actually 1,000 points is not that big of a deal for the Dow percentage-wise now, but it could be the Dow down 2,000 points or something on a day. But it's going to be, you're looking at Apple and saying, look how big Apple is down for the day. That's what's going to freak people out. If you suddenly see tomorrow where Apple is moved all the way down to here, everyone's going to be like, oh no, what now? That was where everyone was going for safety. All these big institutional traders, these big fund managers, they all own a ton of Apple, and it's getting crushed. That will create the panic selling. That's something that will create the panic selling. So it's something to be aware of or watch. Now, just the opposite. If suddenly going into the close, Apple comes all the way back off these lows, I'm not saying that's going to happen, but if it did, that would be extremely bullish in the short term, at least, if it could do something like that. Is to tell you that there were buyers, lots of buyers coming in, pulling it off the lows right there. And that would be something to definitely pay attention to if it were to do that. All right, so Qs have broken below Russell 2000. This is another one that's going to be important to watch because it tends to be a leadership type stock. It hasn't broken below the June lows yet. So we'll have to wait and see on that to see if it drops below there. You can see though that the Dow is down a little over 2%. NASDAQ is really getting crushed. The NASDAQ 100 almost 4%. The Russell is also a 3% move. So you're getting that larger percentage move off of the riskier type, the risk-on type indexes. The NASDAQ, the Russell 2000. Again, that's a sign of aggressive selling taking place. Bond market. Now this is where it's not quite making sense, because today I felt like one of the things I told you on Tuesday was watch bonds and watch the dollar. I felt like if the dollar could pull back a little bit, you're going to see the market rally off of that, because it had been really watching the dollar, and the dollar was getting really extremely overbought. And bonds were getting really oversold. I felt like if they could rally. Well, today, we're down on bonds from where we were yesterday, but not by much. We opened lower, but we're trading right in here. That's not signaling a reason for the market to, be in a free fall panic. And then the dollar. Let's skip over to the dollar real quick. See, the dollar had that big move down yesterday, but it's down again today. Again, you would expect that to be something the market might rally further off of, and it's not. Now, the reason for that big reversal on the dollar, at least what everyone's attributing it to, is the Bank of England initiating a bond buyback program, which is an easing type of behavior. They did it to help their currency. It was getting crushed against the dollar. But again, that's the news item that everyone's pointing to. But the condition before that was we were in an extreme overbought condition. Anything that anyone would say or do that would be a reason the dollar might pull back a little bit would cause it to pull back, and probably pull back sharply. So, that's why I trust charts more than I trust headlines, because the headlines usually are just the moves off of the headlines are based off of the condition of where the stock is within that cycle. If you're stretched, then any news that's opposite of that direction is going to cause a big opposite directional move. It's just, if you're not overbought, I promise you that news out of the Bank of England, if we were down here on the dollar, that news out of Bank of England would not have caused the dollar to drop like that. It may cause it to pause for a day or something, but not drop that big. We were just so stretched. Everyone's trying to find some reason to sell, and that was a reason right there. But again, the dollar's lower. I would expect the market to be up based off of that. So the bottom line is the market just isn't making any sense right now. But this ties into something else I think is important, because one of the things that's bothered me over the last few months is that the trading crowd seems to kind of know what's going on, seems to be aware of what's going on, and nothing is freaking them out. And anyone that knows how to read a chart, the charts have been pretty consistent. The price action has been pretty consistent. And so it looks like the market should go up for the day. It ends up going up that day. When it looks like it should go down, it ends up going down. Maybe not exactly to the day, but within a few days, it's been pretty predictable. Now, what is going to create a panic sell-off? A panic sell-off is going to be created when either you thought a move was going to happen and then it reversed it and you're scared because you were so positive it was going to go in that direction and it didn't, or that you stop knowing, you stop having confidence in what's going on. You don't trust what's going on. You don't trust what you're seeing, you're reading, you're doing. It seems to be opposite. The market's doing the opposite of what I think it should do. Now, if you're feeling that way, guess what? Everybody right now is feeling that way, because if you're bullish on the market is giving you these bearish days like today that's making you wonder, is the market going to rally? If I would just done the opposite today, then I would have made money. Well, guess what? The bears are having the same thing happen. With that rally yesterday, the bears are saying, boy, I thought for sure we were going to drop, and here we have this big snapback rally. If I just did the opposite of what I was going to do, I'd be making money. Anytime you think that way, that's what every person that's ever participated in the market has felt like at some point in time. But it isn't a trading strategy, so don't go set up a trading strategy to do the opposite of what you're planning on doing. It won't work. I remember I had a smart alecky student of mine that emailed me and was, I guess they were trying to put me down, but they said, Jerry, with the trades we've been in over the last couple months, if I just did the opposite of this is what they said. They said, I did the opposite of everything that you did, and I made money over the last 2 months. And they were trying to say basically that was I don't know, they were smarter than me or something like that. And so I just said, well, you're welcome. I'm glad he made money. But I also pointed out that I'm going to start hitting on these trades, and so your system is not going to work forever. Your system you think you have is not going to work forever, because it can't be based on just doing the opposite of what somebody else does. Everyone's going to have streaks where they're going to be right or wrong. Well, at least if they know what they're doing, they're going to have streaks where they're going to have winning streaks and losing streaks. And it doesn't mean they're dumb when they're losing, and doesn't mean they're real smart, overly smart when they're winning. But the point is that these whipsaw conditions that we've seen a lot of in the last few months, it's starting to break down the trader's mentality to where, again, you've got some of the sharpest professionals getting on CNBC saying, I don't know where we're heading, or we could go anywhere from here. You've heard me talk about we could go up, big move up or big move down. We can't see I don't see any clear clues as to what that direction is going to be. And that is an environment that can create a panic sell-off, because if you start to see things really getting out of control to the downside, why is it doing that? Or how far is it going to go? Or, we're already oversold. If I go sell now, I'm probably going to sell right when this thing has that face-ripping rally that just kills me. And so you get frozen. You don't know what to do. And I think the fact that we're in this oversold condition and we're at this critical support level, it is the perfect environment to get the panic that we're looking for. So I just want to point that out again. These are little things that you can learn to recognize, and one of the things again is to ask yourself, when you're trying to figure this stuff out for yourself, ask yourself, what would create the move that I'm expecting the market to make? The chart is saying it should do this, or Elliott wave analysis is saying this should happen or something like that, and you're saying, well, what causes me to panic, or what causes me to be unsure? And the chances are the same things are, because it's tied to human nature. The same things are going to be what other people are other professional traders are experiencing, and probably trigger the same activity out of them as well. All right, let me go back to bonds. So again, bonds aren't. We're in a downtrend, so that's still intact. But the bond market actually looks like it could still have that one more move up, maybe even to retest the breakdown below here. That would take a few more days, maybe. That's something to keep an eye on, though. But it's still technically, this is just a bounce within the downtrend until it changes. Gold, we talked about. On Tuesday we talked about this as being a kind of a selling exhaustion. Not surprising it led to that bounce, but again, it was oversold and it was selling exhaustion. That's usually not enough to make a trade off of that. I don't see any trade that I would like in gold right now. You know, the funny thing about this, the really eye-opening experience it's been for me, my whole trading lifetime, I've always heard, and maybe some of you are the same, that I've always heard that gold is a hedge against inflation. When you're in an inflationary environment, gold will thrive because that's where people will go. They'll buy gold to hold value so they don't lose money to inflation. And if there's one thing that has really probably caused me to never trade gold again is that we've been in a really bad inflationary environment for the last 6 months, and look at the last 6 months or so in gold. It's been one of the sharpest downtrends we've seen in gold. So it's totally wiped out that theory or what. And you can look back, and sure enough, you look back anytime there have been inflationary environments that you've seen gold thrive. And so this is what's really weird, is that it's just not only is it not doing it, it's like completely going in the opposite direction. Now, there might be other reasons, and if you're a commodity expert, you traded commodities for years and years and years, you might say, well, it's because of this or this. But that's what's been baffling to me, is I've always heard that, and it's not, and that's why when I get to the gold chart, in fact, I might just eliminate the gold chart out of the update anyway, because it's like, I never feel like trading it because I can never trust whatever move it's making. So it's almost kind of a waste of time. Oil, on the other hand, is very relevant. With the dollar being down again today, though, it's surprising that oil is finding a little bit of weakness here. Again, technically, we're still in this downtrend, lower highs, lower lows. But there's a lot of oil charts that, at least in particular areas, that are looking more bullish, especially as we're going into the fall. Natural gas, coal. If you're able to withstand a little bit of this near-term volatility, I think those are going to perform pretty well. I think a lot of the selling recently is just because everyone was in oil. I mean, anything oil was working during the decline of the last 6 months, for the most part, at least during this early part of the year. And it became, when you get that crowded trade, everyone's in it. You get any sort of break in that trend, and people start jumping out pretty quickly, and it's caused a little bit of that volatility. But I mean, you look at a long-term chart of oil. Look at a 2-year chart. I mean, this really just looks like a correction. Looks like an ABC pattern right here of this larger trend. Now, again, it could come down further and still be part of that larger correction. but I think we're closer to the low on oil near term than obviously we were. But I wouldn't just jump into oil, especially USO, just because it could be the end of a bullish ABC pattern. I don't know if this is the low, is what I'm trying to say, and it's not showing a lot of real strength in this rally. But there are some pockets within energy. I'm going to look at that when I get to specific stocks to look at here in just a little bit that look attractive to me, and I might end up adding into the portfolio here. We'll take a look at that. We looked at the dollar. The VIX, again, elevated today. Let me show you again the actual VIX. We can't pull the actual VIX up on Traders Pro. I pulled up here. So you look at that reversal we had yesterday. This is why I thought we'd get more than a one-day rally. We opened elevated really high up here and then closed all the way. It just came crashing. The VIX came crashing down. This is a bearish engulfing pattern, which from a candlestick formation is a bearish reversal, which would be bullish for the market, at least in the near term. And then we're moving back up again today, although we're off the highs of the day. Let me take a look at that SPY chart, because maybe that can move back up a little bit off the lows. A little bit. I don't think we're getting a lot of, we'll get most of the movement, what's going to be moving, we'll get most of that in the last hour. But yeah, I would expect that VIX would start spiking. If we do start breaking this level, it should start spiking up. What I would look for is for the VIX to get above, hold on, let me pull that up here. The VIX to get above, if we really start dropping at the end of the day, I look for the VIX to get above yesterday's high. And then you can see right here, number 40 is kind of my minimum level I'm looking at as the market freaking out, panic sell-off, and we're not that far away from that. I think you could get a move up to that on Friday or even Monday. We'll see. It really depends on how we close today. It's really going to, because remember I went over those two possible things that could happen. If we close below those June lows, we'll probably start surging lower, much lower than that. It'll be pretty obvious if we're really going to close below it. It'll be pretty obvious going into the close. We'll just start dropping pretty quick. If we rally off of that, we could still get that snapback rally. Real quickly, chip stocks, again, they've gone lower. We've clearly broken that. In this case, it's the July low because it went lower than the June low right through here. But it's kind of leading the way down. And look at the way, this is one thing that was concerning me a little bit yesterday. We had the market rallying, but the chip stocks were barely rallying. They just were not showing a lot of strength. And their leadership, there's what we're looking for leadership. If they would have really had a real strong up day, I would have a lot more confidence that we could have another day or two rally in the markets. But they've been sluggish, and now we're seeing why. It's really quick to go back down to the downside. Transportation stocks already below the June low, rallied up to it yesterday, back down again today. This tends to be a leadership. Tends to be a leadership index that we look at, comparing the transports with the Dow, although they're basically the same chart right now. They're moving about the same way. The Dow is already broken below the June lows. Bitcoin's trying to hold on to this support area, but I think it's going to break. You got this declining kind of triangle, descending triangle formation. Maybe it tries to rally back up to that trend line again, but I think if the market sells off, this is going to go along with it. And then high yield corporate bonds again. We had a pretty nice candle yesterday, and that was, you would expect the market to have a nice rally off of that too. This was getting oversold. Right back down today though, and so it's kind of the market is moving right along with the movement of that HYG. It is something the market is paying attention to and looking at. All right. So how do you deal with this? Ultimately, what I've been talking about is either we're going to break this low and have this panic sell off now, or we're going to get, this is wave A, wave B, wave C, or maybe wave C brings us up here. Maybe we have a 3-4 day move like this. Ultimately, though, I still think we're going to go lower, because this would not be enough of a panic to create that bottom. So the bottom line is I think that the trend is going to continue lower and could be sharply lower. A couple of the levels that I have marked off, I don't have marked off. I have them marked off on my other charting service here, because I can kind of leave them on the screen here. But if we break this level here, 350 is the 50% retracement from the COVID lows all the way up to last December's highs. That could be a level we find support. 340 right here is the COVID, where the COVID sell-off started from, the high from the COVID. Well, I can show you right here. We can just zoom back real quick. You can see. So the blue line, and there's a lot of stuff on here, so you need to pay attention to all this crap on here. But so this blue line is the 50% retracement of this whole move up. And then the green line is, here's where the COVID sell-off started. That could be a support area right there. And then after that, you're looking all the way down here. I mean, you're looking at some really dire type move. You're talking collapse area, crash, complete, financial collapse type stuff down there, which I'm not ready to get to just yet. It'd take me a little bit more to believe that that's going to happen. And that would be, as of right now, that would be the lower probability outcome. So pay attention to 350 and 340 as potential target areas. If we break this, or eventually, if we don't break it right now, if we rally up a little bit, eventually we'll probably head down to those levels. So what I've been doing in the portfolio, as I talked about on Tuesday, is I'm just trying to grind out some profits. We still haven't gone anywhere. We're still right around this 132,000 level. But I've been hedging with the SARK. Now, by the way, if you're wondering, are there other instruments you could use? There's a lot of these inverse ETFs that you could use. The easy ones are the short S&P 500, the SH, the ultra short, the DOG, the PSQ. The problem with these, let's look at the SH for instance, is look at this big move we made right here. The big market drop right here. The SH went from $15 to just about $17. It made like a $2 move. You look at the SOXS. This is the inverse of the chip stocks. This is what I'm using. Why is it not pulling that up? Hold on. Here we go. You look at that same move on the SOXS, it went from 44 to almost 70. I could make money on this. I barely made any money if I would have just traded the SH. Now, the flip side of that is you're not going to lose a ton if you're wrong on it. So it's really, if you just want to not do anything really, or have a very low chance of a big loss, but a very high chance of a small gain, then use that. But if I think the market's going to drop and I want to get make a little bit of money on it, then I'm gonna use some of these other inverse ETFs. So there's a lot of them out there. One thing too is some of them are very illiquid. There's just not a lot of people trading them, and so you're going to have bad spreads, bad prices. It's going to be harder to get filled on your orders, to get in and out, especially if you're trying to do big orders. If you have larger accounts. So these ones are pretty liquid. They're pretty good, and that's why I'm using them. And they're really, do I need to add any other ones? Really not. They're all going to do about the same thing. They're all going to go up if the market goes down, and I could just add, instead of finding a new one, I could just add buy more SOXS if I wanted to, although I really don't want to get more exposed on these inverse ETFs than I already am. But I've been jumping in and out of these, and I can understand, and I've had to get out of them. For instance, I got out of them yesterday when I knew the market was rallying. I got them right in the morning when it looked like it was going to rally, because these were going to pull back a little bit. Today, when it reversed, and I thought that we'd pull back for a couple of days. As soon as we gapped down today, I went and bought these again. So I jumped back in and again. So I've been kind of in and out. But ultimately, we should be going lower in the market. If you don't want to just be jumping in and out of them, we'll just we might have to handle a little bit of the volatility, but might want to at least have a small position in them, maybe not too much risk if you're not able to kind of read what's going on. But just jump into a few shares and just stay in it. Maybe not the size of my position, because again, I'm able to read. I can jump in and out because I'm reading what's going on a daily basis. But put a little bit of money in there, and at least if the market drops, you're making some money instead of just sitting in cash. In fact, these I think would be safer as of right now than trying to pick a stock here or there that you think is going to go up. You've seen how that's done lately. I've gotten into some pretty good patterns when I've entered the trades, and a lot of them have fallen apart and end up getting stopped out. Really, the only thing that's kept this portfolio surviving is the jumping in and out of these inverse ETFs. They kind of bailed me out. But like I said, the other strategy is go to cash, especially right now. If you're really scared about Jerry can't figure this out, and if he can't figure this out, I don't want to be long or short, or let's just go to cash. Again, that's not a bad thing to do. We don't want to lose a ton of money before we get to a bottom, where we really where we have a high probability of them making a lot of money over the next few years. So not that we're going to know exactly where the bottom is. I'm not trying to imply that, but when we start to get those conditions that tell us we're closer to a bottom, then that's what we want to get more aggressive and buy more things at that point. We take a look at the portfolio. Like I said, we really haven't gone anywhere. Part of that is that SPWR is falling apart here. Again, this looked like a bullish ABC pattern when I got in. Had that bullish reversal candle right there. It looked like put my stop down below here. Well, now that we're dropping below here, we've gone lower than that. That's not an ABC pattern. It's not a correction within the uptrend. This is where I know I'm wrong. Now I'm kind of waiting until we close to make sure we close below that. When I have my stop areas, I like to make sure I close below. I'll show you a reason for that here in just a second, although I may get stopped out of that one ultimately anyway. But because we're already clearly below it, we're heading into the last hour. The fact that we even traded below it is telling me that that's not an ABC pattern. That's not what I thought it was. I'm going to go ahead and just stop out of this. So this is at 2204. 350 shares. Now I am losing a little bit more than I was planning on because we're below the stop. We're below the stop line. It's not by much. But NOC is the other one that kind of frustrated me because I got whipsawed out of it right here. I had my stop below there. I got stopped out right here and then took off. And then I got back in it again. Then I put my stop down below here, and now we're about ready to get stopped out again. But this is a reason why I like to wait for the close, because down here it was trading at my stop, and then it came right back up. So, or right here, this again, I think I stopped out of this because I wasn't going to be able to watch it the market close, and then it came off the lows right there and then took off again. So had I waited till to base it off my stop off at the close, I probably wouldn't have stopped out of that. It doesn't matter whether you stop as of the closing price or you stop as soon as the stock gets to the price. The bottom line is it comes down to whether or not you have the discipline to stop out of your trades. If you find that you can't stop out of trades, that when it gets to your stop loss price, you start making up reasons why it can still go up, or you're going to give it one more day. I'll just give it one more day, and then I heard a little bit of positive news that might cause this thing to go back up. So I'm gonna wait and see what that does. And meanwhile, it's going lower and lower and lower. If you find yourself getting into that habit, then use a strict stop. This is the price. If it gets to this price, I'm not going to think about it. I'm just getting out, because you have to learn to stop out first. And the best way to do it is just have a set price that is what the decision is done. In fact, you could even just put in an order to sell, an actual stop loss order at that price to make sure you just take that decision out of your hands. Once you can trust yourself to stop out of trades, and stopping out of trades doesn't freak you out, and losing money on a trade doesn't freak you out, you learn how to accept the risk and things like that, then you can use more advanced techniques, which would be one of these where do I get a close below this here? This is where I know I'm wrong, but do I get a close below that? That would really tell me I'm wrong if it closed below that. You can use some of those more advanced techniques. It's not easy. In fact, it's not hard to, really to go ahead and get out of this one right now, just because, I think the market could really tank right here, have a big sell-off right here. So I may watch this though into the close just to make sure that I'm not just jumping out of everything. Because remember, if we rally off the lows here, we still could get that 2 or 3 day rally. That's still possible. Tesla, I think this was close to my stop. Yep, this one is as well. Yeah, see, we're at 267.53. My stop's at 265. Same with NOC. My stop's at 465. We're at 466. So I'll wait and see if those end up triggering. All right. Now, as far as ideas for trades, again, I really wouldn't be recommending getting into too much in these conditions, but I know why people tune in. By the way, this is why you always take stock picks with a grain of salt. I'm not suggesting that work doesn't doesn't go into finding trades or finding picks. But for instance, I see this on CNBC all the time. Almost every panel show they have, the halftime report or fast money at the end of the day. Right at the very last segment, what do? They ask for your pick. What's your stock? And they rattle off, I think this is the one you should buy. I think this is the one you should buy. I think this is the one you should buy. I've looked at the chart. I'll look at charts when I see people rattling off picks because, hey, if they see something that they like, and I'm interested to see what the chart looks like because maybe the chart looks good and I'd like it too. I'm always looking for ideas. I would never buy anything just because somebody says I like this and you should buy it. It would have to agree with the stuff I look for, the chart, the trend, the price action, all that stuff. But I can't tell you how many times where I've looked at charts of some of these recommendations and be like, holy cow, I hope so no one buys that thing because this thing is in a clear downtrend. It's got a bearish reversal candle today and it's about to tank. But the other part of me understands that, they've got to give you a pick. They're not letting them say don't buy anything today. They want something that you've got to tell them to buy, and so you can always find something to recommend. Every day I can find something to recommend. Now it could be really wobbly and not something I'm going to do, but that's why you don't want to be a stock pick addict. Okay. Because just like a drug addict, you can find a drug, you can always find the drug to give you the high, but it's probably not what you need or probably what's good for you. And there have been plenty of people to give it to you. And, sometimes I feel like that in this class, that it's like, okay, it's called the stock specific class. I got to give people something. I can give you something, but I am going to preface this by saying these aren't the greatest conditions to be loading up. So if maybe one of these is your one stock you're going to get into, and that's what you're going to be in right now, then fine. But definitely don't be loading up on all of them, and don't be getting into them just because I'm talking about them in class. A lot of these would probably be better with some confirmation. So just be aware of that. It's just a smart thing to do. Don't be so craving stock picks that you don't focus on the other important stuff like allocation, risk management, trade management, money management, all that other stuff that's so much more critical to your success. All right. Having said that, if you go into the muscle stock scans, there's a couple of good ones here. This top one here, RxDX. It's a biosciences, biomedical stock. But you can see what I like about this is it's got this pullback right here, this ABC pullback, nice impulsive move up. The market moving down, this is a nice impulsive move up. You could wait for it to break to a new high, break out as confirmation, or wait for it to go back to a buy, or it did go back to a buy. Oh, that's right, because these are the new buys. I'd probably wait to see if it could break out. There's a little bit of extra confirmation there, but look what the market's done the last 6 months, and look what this stock has done. It's been outperforming for I don't know why, but it's doing very, very well, and it's probably likely to continue if things until it doesn't, until that trend doesn't. Another one in the group is a CAPR. 97 strength rank. Again, one of these that's had a little bit of a pullback, getting ready to break out again. I'd probably wait for it to break out. Now, one that I talked about on Tuesday was Eli Lilly. Remember, I talked about that one, 98 strength rank, and then right after that, yesterday, I had that big gap up. I don't know. I chase it right here. It's come down a little bit right here. See if it comes down, fills in this gap a little bit. But they had that weight loss drug that's probably going to be pretty, well, it seems to be like it could be pretty revolutionary. So, but anyway, that one, I don't, like I said, I don't know if I would chase that one right here, but that one is one that's, we talked about, like I said, on Tuesday. Now, as far as sectors go, I talked earlier about oil sector, and the oil sector has been, there's a lot of interesting stocks within that sector. CEIX, this is a coal stock. Pullback right through here, not a deep pullback. Starting to rally, a little bit weak candle today, but it's starting to rally back up. And definitely coal is going to be something that's going to be a huge need going into winter. That and natural gas. You could wait for it to go back to a buy signal as confirmation. You could put a stop right below this low, because if it drops back below that low, it probably means that it's could have a bigger downturn. But that's one that I like. And some of these, it's not just the stock, but it's the story. Marathon Petroleum, MPC, has a really nice pattern here, 98 strength rank. So you've got this big dip down right here, and then it's rolled back up. So you have kind of this bowl-shaped move, and then this kind of corrective pullback. And you had this massive move up yesterday that brought it to a higher high. So it broke that downtrend, right, that short-term downtrend right there. Now the big key is this going to be a higher low from this low? A little bit of a weak day today. Again, you could wait for this to go back to a buy signal. I'm going to wait until I'm going to wait to see if it can break back above yesterday's high. That way, in case we have a big sell-off and this drops along with it, I don't think it's going to drop below that low. But I've been buying into some of these right when they're moving down. But this is a oil refinery stock. A lot of these stocks are looking more and more bullish. Like I said, there's segments within the oil sector that are looking better than others. But that one, I think it looks really, really interesting. And then the last one is LNG. It's a natural gas, one of the largest natural gas companies. Now, there's a couple ways to look at this chart. Based on the context of everything else, all these other energy stocks that look like they're completing these ABC patterns, I would assume that this is wave A, this is wave B, and this is wave C. Now that can happen where your wave B goes a little bit beyond the end of wave A, and then this is wave C. It's usually a little bit more rare when that happens. So I got to make sure I'm not just seeing what I want to see. That would be the bullish version of this, that we had two good up days right here and that we're taking off. This fits into natural gas is going to, everyone pretty much believes natural gas is going to spike in the winter. I don't know how it doesn't. But sometimes when it seems like a no-brainer trade, I get a little bit worried that, it's too obvious. Maybe it's not going to work because it's too obvious. But we did go a little bit higher right here. So the other possibility is that this was the correction right here, and then this was the end of this is an impulsive move up, and this is impulsive down, and that we might rally up a little bit more, but then we could have another impulsive move down. Now I don't think that fits the time frame going into the colder months. I just think that I've been waiting for an entry into this. I liked it right into here, but I didn't want to chase it. So I'm going to go ahead and get into an LNG trade, and I'm going to get my stop. I'm going to get my stop below, not only below this low, I'm going to get it below this low, because I don't want to get bounced out of this thing. And I do like the fact that it's not a huge strong bullish candle today, but it looks better than the other oil plays. And I don't mind a little bit of volatility bouncing around a little bit in the near term. And so the low of that day right there, let's see how this trade looks. The low of that day was 141.99. So I'm going to just put it at 141. And I definitely would know I'm wrong if it gets down to that level. And I'm gonna, let's see what, no, 100's too much. 5, no. It's for about 55 shares. That'd be about 9,000 in the trade. Portfolio at risk, I want this, well, anything below 1.5% is fine with me. So well below that. This is about how much I would lose if I'm wrong. Obviously, it could be a little bit more than that if it drops below my stop, but that's what it's calculating if I got out at my stop. You got to be okay with that. If that's too high, you drop your shares down to get that risk amount to a level you can handle. But I'm okay with that. So I'm going to go ahead and purchase this. Now, I may jump into those other two, but I'll probably wait. Like I said, I'll wait. I don't want to jump into a ton right here. So I might wait for a little bit of confirmation and to see what the market ends up doing right here. Let's take a look at the SPY before we wrap things up. Yeah, it's still trading below that low. We'll watch it this last hour, see if it surges or if it pulls up off of that, and kind of go from there. All right, that's all I have. Have a great week, everyone. We'll see you on Tuesday for the next market update. Just remember, because we got a few days before then, if we close below those June lows, it could get ugly tomorrow. And if it does, and we get a big sell-up tomorrow, remember that markets typically don't bottom on Fridays. We'll probably get it follow through, at least a gap down probably on Monday. Although it could be an attempted rally that reverses and sells off and goes lower on Monday. But usually you're not going to bottom on a Friday. And then whatever happens on Monday, we'll talk about it on Tuesday and see what we do from there. The other possibility is that, again, we come off the lows in this last hour. We hold that support, those June lows, and that maybe this is wave A, wave B, and we rally a couple days up here, alleviate that oversold condition a little bit more, and then drop down. We'll see. We'll see what happens. I'm leaning more towards the panic sell-off here, but you got to be prepared either way. All right. Thanks, everyone. Have a great weekend. We'll see you on Tuesday for the market update. Bye now.